And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, everyone. Welcome to the Market Forecast. Today is Tuesday, April the 26th. I'm John Hoagland. Thanks for joining me for what I like to call Let's Go Fishing. Let's see if we can catch a couple of walleye, maybe a couple of muskie today. If you're in the markets already, hopefully things are going your way. As always, our focus here is on accurate context, good risk management, and continuing to remain patient. Lots of eco numbers this morning. 7:30, the durable goods numbers came out somewhat mixed. Very little response in the markets as far as I've seen so far. 8 o'clock Central this morning, we're looking for the Case-Shiller and FHFA housing prices to come out. 9 o'clock, consumer confidence or lack thereof, as well as new home sales. As far as what I'm focusing on this morning, U.S. stocks have started to fade a little bit off. Starting to open, looking like they're going to open a little bit lower today, facing that deluge of economic information and some big earnings. Earnings ramping up this morning. Pepsi, UPS, and GE, just to name a couple of them, all of them beating expectations. We have Microsoft, Alphabet, and Visa, and many others after the close. We're really getting into the teeth of earnings season. Crude prices have been holding. Nope, Lacey, don't go down there. Crude prices have been holding below $100, awaiting data from the API. That's today at 3:30. Last week's API announced a draw of 4.5 million barrels. If you remember, the EIA was around a 8 million barrel draw last week. So we're going to get some information on the fundamentals in crude oil. China has taken steps to stabilize the yuan, and they're looking for further ways to support their economy. As always, make sure you hit the lucky like button. Share, comment, question, feedback, heckling, and love are always welcome here on the Market Forecast and the Market Recap. And we are hoping that you'll subscribe to our YouTube channel and you get notifications when we do go live. Speaking of live, today we have the Coach's Playbook. We're going to be discussing what to do when your strategy just stops working. And we also tomorrow have Top Step Trading at 3 o'clock tomorrow, so no recap, but I'll be joining some other traders at 2:30 for Top Step Trading. There is the link for Top Step Trading. That's again tomorrow at 2:30 Central. Here's the link for Make Hogue Money today. And that's right after the forecast here, right about 8:20. We're going to get in there as fast as we can. Take a look at some opportunities that we may see in the S&Ps this morning. Okay, I'm going to be paying attention to what happens here, what happens as we come into the open, after the open. If you remember last Thursday, we had a couple of small losing trades. I think we were down about $450, and then we set up a trade to take after Make Hogue Money. We took a short on a breakout down below the initial balance, or down below the opening range, I think it was. I don't remember, but we had some pretty lofty goals, and it was a really big down day. We had one trader that was looking for 20 handles of profit. We had another trader that was looking for 40 handles of profit, and I decided to go between, and we made 30 handles on that trade last Thursday. So that's a pretty decent $1,500 win on a one lot. I'll take that, and we'll see what we can come up with today. The VIX this morning up a little bit, 27.59 from the close from yesterday. The dollar index continues to leak higher at 101.50, and the yield on the 10-year continues to leak a little bit lower at 2.77. Got to say good morning to everyone as usual. Tachyon, good morning, Theo. My brother Rick, love you. Tachyon down 700 for the day, down 700 today, done for the day. it's okay. You've been putting up some pretty good days lately too, haven't you? So just maintain that discipline, Tachyon. Brian Shaw, good morning, fellas and fellettes. I haven't heard that one yet, but good morning, Dan Trader. Good morning, Dr. VJ. Frederico, Janus, Dan Trader. Don't forget to. Oh yeah, here's Lacey right here. I was catching her going downstairs. I don't want her to go downstairs. Level 2, good morning, people of Earth. Terry King, good morning. Laura, Vince, good morning. George. Denise, good morning. Charles, Jay, James Harris, practicing. Let's practice self-control by following all our rules for your trading strategy and profit. Yes, self-control. What you don't control controls you. Good morning, Sarah Hall. Good morning, and prayers and love to you as well. Alfred, good morning. Keith, Ronald, Sarah Hall. We already said good morning, but you've given James the thumbs up on his good advice for this morning. Rogue Trader, Zorain, Glitter Sandwich, good morning. It's my pleasure, Glitter. It's all for hoping to help you with your success. Jacalo, Devant, Expediter Dean, Luis, Ocean Blue, good morning. Haven't seen you in a little while, Ocean Blue. It's good to see you again. James, Stephen C. If yesterday was a dead cat bounce, then that was a lot of volume too. Yeah, it started out kind of as a dead cat bounce, but we certainly spiked up some volume as the day went on. The link to make Hogue money is there, Ocean Blue. So with those handles, you can open the door now. Yeah, we can open the door. Rusty Golfer, good morning. Isaac, Dan, good to see you this morning. Jerry is awake, and hopefully John is too. Return to the scene of the 2:30 p.m. breakout. Yeah, and it's also pretty close to the base of the late spike from Friday, so there's a little convergence here. It's going to be an interesting trading day. I'm excited. Alessio, my good friend Matt Hoyt from the Chicago Mercantile Exchange floor. Hey, got a couple of guys from the family from the floor family here. John Wilkowiak also from the floor. Good morning. I hope you and your family are well also. Hope everybody's doing well and feeling good. Jay, good morning. Cheryl, good morning. Is the S&P going to 5,000? I'm going to go ahead and step out on a limb here and say someday it will. I don't know when. All right. So it's Make Hogue Money Day, so I want to try and be pretty much done with the forecast by around 8:15. So I don't want to rush through things, but I don't want to be to go too long on a lot of this stuff. So we're going to jump into the charts right now. Marcus, why futures and not forex? Well, the expertise here at Top Step is largely based in futures. We entered the forex field for a while, and we've decided to do what we're best at, and that's the futures. So you can always trade currency futures. Very similar. All right, let's jump into the charts here, starting with the daily in the S&Ps. Again, it's good to see. I got a brother here. I got some floor brothers here. It's good to see everybody. All right, let's jump in. So. Sorry about that. I didn't turn on the mic. I apologize. I've got a whole bunch of new equipment coming, and unfortunately, the supply chain has everything kind of locked up on me. So, but we're working on that. Should have the audio now. So this is the S&Ps. I remember coming in yesterday morning, we were lower. We had a late spike. We were looking for some continuation to the downside. I think there was a lot of expectation for a continuation to the downside yesterday. You guys should hear me. You should be able to hear me now. There was a lot of expectation for continuation to the downside yesterday. We got too short. We got too short in the hole. I was talking about this in performance coaching yesterday. I thought, a lot of people are expecting this market to kind of come down and test weekly kickoff low, or the March low right here, 41.29, or the February low, 40.94. We're getting pretty close to our 20% off the all-time high as well down here at 40.86. So a lot of expectations, a lot of eyeballs down there, and those eyeballs were denied. We lost 7,500 in open interest yesterday, indicating this move to the downside did get us too short, and we liquidated or covered some of those shorts on that move to the upside yesterday. Let's take a look at the 30-minute. One other thing. Noticing this morning, this is the slow stochastic, and we put in a lower low yesterday, but we did not put in a lower low in the stochastic. So there's a bit of a divergence. Other momentum indicators are still indicating that there's still potential momentum to the downside, but just kind of showing this this little divergence in the slow stochastic. In other words, the low from Friday in the stochastic was lower than the low from yesterday, which was a lower low in the market, but it was higher in the stochastic. So that's an indication that momentum may be starting to fall off to the downside. There's all kinds of indications and all that. Just wanted to show a little bit of this delta stochastic divergence. All right, lots to look at here in the S&Ps. So yesterday we had a late spike from Friday. We opened below the late spike. The expectation is for continuation or acceptance below the base of the late spike. We had a move back up to the base of the late spike, which is roughly right about here, 42.74. And we got right up to it, and we stopped, and we turned around, and there was a pretty decent kind of short time frame trade to the downside here. But if you married it, it wasn't too long before it got taken out, and we found some acceptance back inside value from yesterday. Now what are we dealing with? We're dealing with another late spike. Now, the true base of this late spike is right about here, 42.8250. 42.8250 is where M period really kind of pushed higher and closed right at the high, which, by the way, settlement was 42.9275. Looks like we're going to be opening below the base of the true late spike in M period, the last period of the day. But where did this market really kind of begin to accelerate? It was at the base of the late spike from Friday. So there's kind of two bases for the late spike here. We've got 42.74, which is right around the base of the late spike from Friday. And we've got the base from the 42.82. If we open below both of them, it's going to mark rejection of lower pricing. And of course, anything can happen. A.C.H. That's our acronym. Anything can happen. So we had some resistance at the base of the late spike from Friday. The base of the late spike from Friday still is important in today's session, and it looks like they're going to make it even more complicated because it's going to open right on it. We're in range above value from yesterday. We're going to try and stay a little bit patient this morning. I don't think we're going to want to try and trade the opening range trade. And that being said, it's going to make a liar out of me for make-whole money. So, going to be just kind of trading what we think, trading what we see. There's a lot of influences, economic numbers due out today, earnings due out today, on top of everything else that's going on in the world. Trade what you see, look for opportunities to limit risk. I'm going to go out on a limb here, and I'm going to say that the base of this late spike from yesterday, this 42.74, is going to be important at some point in the session today. Now, if the market does head to the downside, I want to point something out. Jim Dalton calls these anomalies. Okay, so here's, we're up here. Here's the base of the late spike from Friday. Here's a base of a late spike here from yesterday. Okay, here's the true late spike is just all the way up here. We're probably not going to be opening up there. Anything can happen, of course, but if we do start to head to the downside, there's an anomaly. There's a one little single TPO sticking out right there, and that is sometimes a powerful visual magnet. And if people are focusing on it, they're going to bring price to it. I'll be watching today to see if we actually get a move down to this little anomaly down here left from yesterday. All right. I'm getting a little long-winded already here. Crude oil. Still coiling. Volume was pretty high off the low down here yesterday. We did bring in some volume, but we added 800 in open interest. That's a little bit inert. Obviously, we've got an inside extended trading hour range today. And, I still kind of feel like we're largely in short time frame control here as this market continues to coil in this pennant formation. New information is due, I guess you could say. Here's the big move to the downside. We did, at the end of the day, have a late spike. So now we've got another late spike here in crude oil. The base of the late spike is right here, 74, right about there. We are obviously opening right now above it. We're also opening with a gap. So the market is giving signals or nuances that are saying that this market is accepting of higher pricing. If we come back and we check the base of the late spike, that still offers an opportunity to look for an execution to the long side, because again, we've opened in an area where the market is rejecting down below and accepting higher pricing. We can't close the gap. We're going to be looking for opportunities to go in the direction of the gap, and there is some potential repair in the gap that we left here from Friday to yesterday. Obvious targets, we've got a naked point of control right here, another one up here, we've got a naked point of control down here, and we've got 96.10, which is weekly kickoff low, which we traded down below considerably yesterday, but we did reject. So rejection of lower pricing below an important inflection level, a late spike, an open above a late spike, and a gap. The nuances are saying we're going higher. Opening range. Substantial. 36 ticks. We've taken out the high of it. I'm not going to be playing this. I'm going to try and be a little smarter and be patient and wait for a good trade location as the day goes on, if we get one. So even with all these nuances showing a rejection of lower pricing, anything can happen. Nasdaq. All right. Volume and open interest were higher in the Nasdaq. That's a little different than the S&Ps. We didn't get a true test of weekly kickoff low. Tech earnings later. A lot of folks are going to be focusing on Microsoft and Google and Amazon and everything at the end of the day today. Is this a bullish piercing pattern? Do we get more than halfway through this bar? If that is the case, we may start to look for opportunities to buy weakness. Here's the 30. So yesterday we ignored the base of the late spike in the Nasdaq. The Nasdaq was much stronger yesterday than the S&Ps. It's been a lot weaker. It makes sense that it's going to be stronger, but we closed and traded right to the base of the late spike relatively early. We ended up coming back into value. We did not quite yet test this naked point of control here. Do we have any overnight inventory? We're probably not going to be opening with a gap. So I'm going to try and stay really patient today and look for better trade locations as the day goes on. The market's still in range above value, but in range nonetheless. Try and stay patient. Gold. Okay, so open interest lost 11,000 in open interest. Long liquidation, people getting out. Pretty decent volume. The swing low from the 29th was supportive yesterday. We got an inside extended trading hour range. There's plenty of opportunity for upside repair here. Take a look at the 30. Overnight inventory was to the long side. It looks like it's largely been reconciled. We were putting in higher highs. We're putting in higher lows since we put in the low yesterday. Lots of potential repair upstairs here. This whole gap is a structural weakness. So if we reject yesterday's range, we're looking for opportunities to buy weakness on pullbacks to see if we can get this move to the upside. If we leave and come back into range, that bet is off. Again, anything can happen. Euro. Okay, the dollar continues to leak higher. The euro continues to leak lower. I had a level on here I thought I put on here, but maybe not. So volume was really just okay yesterday. We did add 1,500 in open interest. If that's a little bit inert, we did add some new sellers, some new business down below that weekly kickoff level that we broke out of yesterday. We're seeing some continuation today. There's a swing low from March of 2022. It's 10671. 10671. It's right about here. That's the next swing low where we might be able to count on a little bit of possible support. But overall, you see the markets moving lower. We always run the risk of the face rip and rally. And that might be an interesting spot for us to see that happen, that swing low all the way back 2 years ago, 10-year. All right. We've accomplished a little bit more than just short covering yesterday. We were kind of speculating we might see a short covering rally. We did more than that yesterday. We had a little bit higher volume, and we added 4,200 in open interest. That's not a big number for the 10-year, but still it indicates that, hey, people are willing to come in here and buy this market, even though we know rates are going lower in a week, a little over a week. So 4,500, 4,200 in the 10-year, is that a little bit inert? Rates have slipped the last few days. It makes sense that this is getting a little bit of a relief rally. Are we close to breaking structure in this downside move? We may be getting there. Take a look at the 30-minute chart. Okay, we got overnight longs. Those longs are continuing to get paid here as the market is now open in regular trading hours. Last week's high looked a little bit interesting for a potential opportunity and an execution. And the low from this bar right here, the 730 bar, the low is right on last week's high. So that did seem like an interesting level where we may be able to find some fish. We're now leaving yesterday's range and value. If we continue to bring in business, it's going to take new business for this to continue to move to the upside. I don't want to fight it. It's kind of hard to say when we're talking about the 10-year and what's going on with rates. Well, yeah, Matt, rates are going higher, but for the past 5 days, the yield on the 10-year has been slipping to the downside. So everybody knows rates are going to be going higher, but it's all in the timing, right? So, nat gas, we have a bullish piercing pattern. We had a island top. We had a bearish engulfing pattern. Now we've got a bullish piercing pattern heading in the other direction. May expires tomorrow, so we're still a little bit foggy as far as volume and open interest are concerned, but we did add 1,500 in open interest off this low from yesterday. Take a look at the 30. We got a late spike. So this is actually after the close, but it did, kind of leave balance, and and it kind of closed here higher without any real opportunity to accept that price. Well, overnight we've accepted that price. We don't really have any overnight inventory with which to work with, but we did open with a gap. If we can't close the gap relatively early, we're going to be looking for opportunities in the direction of the gap, which would lead us to the upside. Here's this is the we can't see it now, but here it is. Here's the island top and the bearish engulfing pattern that occurred off that high. That's powerful reversal pattern. Maybe some fundamental changes here in nat gas as we kind of pull back up towards those levels. You see, we're discussing the O'Hare trade, the O'Hare play. Yeah, the O'Hare spread. Put on a trade and then take the blue line to the airport and call down to the floor and see where the market is. If it's a winner, cover it. If it's a loss, jump on a plane. Yep. All right. Okay. Metal sell-off, margin money, margin call. Can't meet a margin call if you don't pick up the phone, Dan. Yeah, that's the O'Hare spread. Yep. All right. All right, we did that in pretty good time. Hopefully I didn't ramble too fast, and hopefully I made sense sometimes. Looking forward to Make Hogue Money. I'm going to be in the Zoom room by 8:20. We'll go over the rules and we'll get started on looking at trades. I'm looking for a couple of volunteers, so if you want to speak, you want to share your charts, you want to come up with the trade ideas, we're all going to vote on them. But if you want to, be a part of the decision making in more of a vocal way, let me know. I'll make it available for you to speak. I'll make it available for you to share your charts, because context is always very important. Everybody has their strategies. Everybody has their tools. We just gotta like to get an idea of what kind of context, what time frame you're trading in, how big you think the trade might be, how small you think the trade might be. And this is all still in the beginning stages of Make Hogue Money. We're going to try and improve on this as time goes on. So we're looking forward to your feedback. We got a new feature today. We're going to have another member here at Top Step in the room. I think Jack's going to join us today to see if he can keep caught up with any of the other thought ideas and questions that are going to come up in the chat. So, repost the link. I can do that. And here is that link. Mike, I'll look forward to seeing you there. I'll look forward to seeing you all there. So take your deep breath. Stay humble, grateful, and creative in your trading today. Looking forward to seeing some good news at the end of the day during the market recap. And I'll see you in just a couple of minutes here in Make Hogue Money. Looking forward to it. If I don't see you, have a great trading day. But let's go make some money. Blessings, everyone.